Hi, I'm Tim Sustak, Chief Credit Officer with Vizzo Financial, and this is the economic update for May 2017. Today, we'll take a look at what's going on with consumer spending and if it will affect how the Fed looks at rate increases in the near future. We always hear that the consumer is the engine that makes our economy go, and lately, that engine has been a bit down on power. For instance, first quarter GDP came in at a lackluster 0.7%. The fact that GDP was down in the first quarter was probably not a shocker, as GDP has had a habit of dipping in the first quarter. But the number that sticks out is a very weak consumer spending component that could muster only a 0.3% increase, the weakest result since the Great Recession. Probably no surprise then the consumer spending numbers for March were trouble as well, coming in completely flat. Add to that the fact that wages could only show an increase of 0.1% for March, which is definitely not supportive of spending, and that's not a real pretty consumer spending picture at the moment. As we discussed last month, automobile sales sure have not helped consumer spending as of late. However, we did get some relief in the April sales numbers as volume rebounded to a 16.9 million unit annual rate from a weak 16.6 million unit annual rate in March. The April number was still a bit under the consensus estimate, but does give us some hope that consumer spending may have the strength to do some catching up in the second quarter. How will the weak consumer spending picture affect the Fed? We'll look at that after the break.
In a time of ever-changing technology, credit unions must stay current. Mobile services are on the rise and the way of the future. With Mobile Pay and Mobile Deposit, your members can manage all of their accounts, payments, bills, and deposits from anywhere in the universe with the use of a smartphone or mobile device. As technology rapidly evolves, the key to a successful support system is reliable IT services. For mobile and IT services, there is only one solution: ICU Services.
Welcome back. By the time you view this, we'll know what happened with the May FOMC meeting. There probably wasn't much to discuss. There was little to no chance that the Fed would have taken a rate action at this meeting. The Street is still showing the best chance for the next rate action at the June meeting, with about a 70% probability as of this taping. What we hopefully got a glimpse of from the May meeting is how the Fed is viewing the recent economic numbers in light of their predictions for 2 more rate hikes this year. Most at this point expect the Fed to acknowledge the first quarter weakness in GDP and consumer spending, but look at it as a momentary blip that should work itself out. One fly in the ointment could be the inflation numbers that took a hit in March, with both the PCE price index and core PCE price index moving backwards somewhat in relation to the Fed's 2% goal. The PCE came in at 1.8% year over year versus 2.1% the prior month, and the PCE core came in at 1.6% year over year versus 1.8% the prior month. The FOMC statement, in terms of how the committee views the weak first quarter, and the recent inflation numbers could give us some indication as to whether we're still on track for 2 more increases this year. Look to the FOMC minutes from the May meeting, to be released on May 24th, for some additional color on how the Fed is feeling. Thanks for watching the economic update for May 2017. Here are this month's release dates for some of the more important economic statistics. We'll see you again next month for another look at the economy, and as always, thanks for watching.